Good morning, good morning, good morning, everybody. It is Tuesday, December 6th, and it is coming close to around 6 o'clock a.m. And I'll get to it in a little minute, but futures are pretty much flat. Still have a problem with oil, which I'll show you in a minute here as well. And yesterday, we had that gap down and then that quick dip. And, you know, I was obviously very adamant about that 40-30. We came down to it, tested Friday's lows, and then we had that small recovery as we were going into the EU close. And we just failed that 200-day moving average. And again, no speakers, no news, no headlines. Seriously, no headlines. The only headline that was out on crude was that Janet Yellen went ahead and signed the bill saying that they were going to put a price cap on Russian oil at $60. They agreed to it. That's about as good as agreeing that you're not going to spend $30 million on Burger King over the course of your lifetime. You can agree to it all you want. It doesn't make a difference. But regardless, it was well prior to this happening, and we just failed and failed and failed and failed and failed and failed and failed. Came right back to what I'll show you in a minute as prior resistance. And then as we went into that last hour, we started to recover. We broke above 4,000 there at the end. We broke right above 4,000, 4,000, 4,001. I got private messages from tons of you that used that last 2 minutes of the day to bail out of those 39.95, 4,000 put spreads. And actually, half a dozen of you collected. And then we closed fractionally below that 4,000, right on that 38.2 pivot from the COVID lows. And again, it's a video game. It's nothing but a video game. But I'll show you over here. This is crude. This is crude oil yesterday, right here. This is crude. One of the best traders I've ever had the pleasure of sharing alerts to over in the futures room loves to trade crude oil. And that 83.13, I was giving it to him last week. He's got it. He's got plenty of charts and lines on his charts. And we're up here that we're looking like as if we were going to that 83.13 again yesterday morning. This is just prior to the opening bell. And then crude completely just slicked off the streets right down to that 76.89. And here we are now setting up what I believe is a bear trap on crude oil. And crude oil should now start to begin to proceed back up to 76.89, which, showing you on the crude oil, that is where you got your major fall off over on the Russell 2000. The Russell 2000 is obviously 2,000 companies, but you got a lot of oil companies that are in there and a lot of small banks that are in there. And as I showed you yesterday about the US dollar, the DXY, due to have a bounce, not good for banks. All of that brought IWM right back down to that 181.73, which is the big pivot from when Pfizer came out with the cure and Joe Biden was announced the winner of the elections from blah, 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 blah. You can see here very clearly on IWM, you're looking at a big support level here, and you can zoom in really, really tight, and you can start seeing that you do have higher lows that are being posted. Come over here to the QQQ, and QQQ right down to that 286.50 yesterday. And again, looking at it from a very weird angle, you are still looking at higher highs and now looking at higher lows. So, again, with CPI and the FOMC being a week away, we may have done too much yesterday and taken that entire dip a little bit too quickly. This is our big CPI run, and then bam, here we had our runs. And as you can see here on the SPX, unfortunately, as bearish as we would like to become, we are still looking at higher lows and higher highs as we're proceeding here. And I've got another image that I'm going to show you over there in a little bit over in the email. The dailies are not oversold, but the dailies are threatening to be a little bit of a bear trap from an RSI point of view. On our 4-hour charts, we basically came down to the levels to say, hey guys, you did a little bit too much of a dip. And yeah, anybody who's out here buying puts right now, I don't think it's going to work out too well for you. And again, over here on the VIX is so bearish that we're right back to 2102. Of all places to be, we've only made it to 2102. So, again, unfortunately, as much as I would like to say we're going to go eat it all the way down to 3830, we've got too much of a bounce that is unfortunately due to occur. We have zero catalysts that are out here for the rest of the week until we have PPI at the end of the week. So it very well could be a nice grind. But the most important thing that I took from yesterday was that we finally got a little bit of range back. We had a 68-point day, the biggest since we had Powell. One of the biggest days that we had without Powell, if you take Powell out, since you go back all the way to November 15th. And even prior to that, only November 10th, when we put in that big bottom there at 38.59, or sorry, when we had that bounce off 37.48, we had that 200-point day on the CPI. We haven't had range, and we finally got a little bit of range, and now we're working with 3 red closes. So 3 red closes prior to Powell. We've not had really that many consecutive red closes like that since we posted that low over there on 36.98 back in November 3, the November low, where we had 4 red closes. So, again, being bearish and, wanting to get aggressively to the downside, it's just not the setup. And that grind that we had yesterday, how we dropped too quick, too fast, or too far, too fast. No, it's unfortunately looking to be that we are going to have a very slow upward grind to the, somewhere up to that 40-30 level, 40-20. From that 40-20, 40-30, you got to fight the 200-day moving average, which is easiest broken when you gap above it. And then you've got that gap from the weekend up there all the way up to 40.76. So it's, again, I wouldn't be overexposed on any kind of calls, but I would definitely want to be extremely diligent about taking off those puts, which, hey man, yesterday I got out of those SPY 404 puts round 3 way too early, and everybody knows they got out way too early. Those things went all the way to $6 yesterday. So again, it was a great trade. It was a great idea. Because you're number 3 or number 4 out of the 100 guy gangbang, you still got yours. So nothing to complain about. But that is the one thing that I do see, which most guys complain about, is I got out too early. I got out too early. Oh, I could have made more money. I could have made more money. Well, you know what? I sat down yesterday and I'm going to work with this. And a lot of guys want to go into SPX credit spreads and they want to start hitting home runs and they want to start throwing, full court baskets, 5 in a row, bang, 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 like Stephon Curry. And, they want to throw, Doug Flutie type touchdowns. You start with $500 and you trade one contract doing these credit spreads and you take the safe trades. Those are the ones that I look for that I think you should get at least 50 cents. Yes, I've worked with you on the entire process of how 5% compounds and it grows. But I'm going to show you here so that you understand. You take one contract, looking for 50 cents. That's an 11% return. You're going to take that same one contract, 10 trades in a row. And after 10 trades, you're going to have $500 in profit. Now you can start moving to 2 contracts. Same thing, looking for that safe trade, looking for that 50 cents. $100 you're making now. It's going to take you 1, 2, 3, 4, 5. 5 trades. You're going to have $500 profit on that. And now you're going to be going into trade number 16, and you're going to be trading 3 contracts. Same thing, 1, 2, 3, 4. You're going to have over $600 in profit from trading 3 contracts. And by trade number 20 trading sessions in a month, within a month, as long as we can get the safe trades every day, which Many of you have already seen, I show them every day. You're going to be trading 4 contracts, looking for that 50 cents, getting $200 a day. 200, 400, 600. After 3 days, you are going to be up to 5 contracts. 250, 500. After 25 days, 2 days later, you are going to be up to 6 contracts. $300, $600. After 2 trading sessions, you're going to be up to 7. 2 trading sessions later, up to 8, up to 9, up to 10. You give me 32 trades. You give me 32 trades. I will have you making over $500 a day doing credit spreads.